All right. Hello there. It's 5 Minute Financial. It's me, Hugh Riley, and of course, John Klotz is joining us here today, as always, on 5 Minute Financial. And we better hit that clock, John, because we got 5 minutes to cover an important financial topic.
Let's go.
And today's topic is health spending accounts, and the clock's already rolling, John. You better get going.
Well, Hugh, I like to work under the gun, so this is good stuff. Let's talk about, business owners and health spending accounts. So very often I work with IT consultants, as a perfect example, who left a firm, say like IBM, and are now acting as consultants.
So, yeah.
Go ahead.
So these are like the independent business people now that have to look after their own health stuff.
You got
right?
it. You got it.
Okay.
So they come to me and they said, I want to replace that plan that I had at IBM. And I go, well, time out. Because a lot of that plan was to improve morale.
Mm-hmm.
And you don't want that stuff. You just want the insurance.
Right. You've got enough morale.
Yeah, you're now paying for it. You're your own employee. So what I say to them is you've got to have your priority list. So the big priorities is, what if you become disabled and you can't work, right?
Mm-hmm.
A lot of lousy things will happen. You won't have any income coming in.
Mm-hmm.
So you need to get some disability insurance. And I think that's pretty straightforward. So disability insurance is a big one. A lot of people are married and have children.
Yeah.
Wait, if they die, who's gonna pay for them? So they need some life insurance. And what if you get really sick and you require expensive drug treatment? Well, you need a drug plan, right?
Okay.
Where the whole thing, Hugh, falls to pieces
Mm-hmm.
is in stuff like dental insurance, right?
Oh,
It's
okay.
not really insurance because a typical plan
Mm-hmm.
costs about $100 a month
Yeah.
and gives you about $1,000 a year of benefits. So do the math.
I've done the math, and it's not looking good.
It's not good. So what you want to do with that stuff that's not really insurance
Mm-hmm.
is you want to deduct it. And what the government has set up is something called a health spending account,
Oh.
which is under Section 118-2 of the Income Tax Act. I know you read that.
It's on my bedside table.
Exactly. And it allows you, it's a personal health services plan that allows you to deduct medical and dental expenses, either to your company or as an individual.
Mm-hmm.
And it's not an insurance plan.
It's kind of self-insurance, but you're
Exactly.
saving money and you're saving tax too, right?
Exactly. It's a deduction. So
Okay.
it's really cool. So what you do is, and that's what a health spending account is. So set up by the government, Section 118-2 of the Income Tax Act. You put a fixed sum of money in it every month,
Mm-hmm.
and you build up an account.
Mm-hmm.
And that's what you do. So, for instance, if you're a business owner, you're incorporated,
Yeah.
and say you decide my dental bills for my family are $1,000 a year, you put a monthly sum into this thing because that's how it has to work. It has to be monthly,
Makes sense.
and it accumulates
Yeah.
over a period of time. And there's your $1,000. You then go to your dentist, and you pay for it right there. And actually, they've got a cute little Visa card that allows you. That's just like a bank card that you give to your dentist, and money comes right off it.
That's great. You can save up for major dental work.
Save up
even,
for major
right?
dental work, exactly, and write it off.
Now, you mentioned the incorporated guys, but what about the sole proprietors? Is there a
Yep.
difference?
Absolutely. So it's better
Yeah.
if you're incorporated.
Okay.
And I'll tell you why. Because you can, firstly, there's no limit on the amount that you can put into these plans. Okay.
Oh, as a corporation.
Yeah. If you're
Okay.
if you're an individual,
Mhm.
the maximum you can put in is $1,500 per year per person. So you and your wife, if
Right.
you weren't incorporated, can put in $1,500 each,
Mhm.
and all of your 11 children, you can put in $750 for each of them.
Okay.
11, is it?
It's yeah, 11.
Oh, boy. No, I'm just kidding. You can put in $750 for them. The interesting thing is, if you're incorporated,
Yeah.
you can carry, if you don't use the money, you can carry forward it to the next year. And at the end of the second year,
Yes.
if you don't use it, it flows back into your corporation.
Okay, this is getting complicated because I know that you guys know what you're doing, but we don't have a lot of time left. You can see on the clock, but I want to know, like, is a medical required for this?
None. Now, that's the interesting thing. There's no medical required. And what they'll do is, there is, however, a catastrophic rider on some of these plans. That's really cool. So here's the problem with a health spending account. Let's say I put in $2,000 a year into it, and someone in my family gets really sick,
Yeah.
requiring, and I'll give you an example. If you develop multiple sclerosis,
Mhm.
there's a drug that costs about $7,000 a month,
Yep.
and it allows you to lead some of a normal life. This has a $50,000 catastrophic rider on it per person per year. on top of the health spending account. That would allow you.
John, okay, that's it. We can't talk anymore. The 5 minutes is up. The 5-minute financial is done. And we didn't even get through half of these questions.
Well, Hugh,
And you know-
what can I say?
Well,
we're doing our best.
We're doing our best. We only got 5 minutes, though, because people don't have a lot of time on the internet. But if people want to find out more about this, because this is for self-employed people, you know, entrepreneurs,
Yep.
I mean, they have to look after their own health spending. And they can get more information if they get in touch with you, right?
Absolutely. Website, northwoodmortgagelife.com. Call us at 416-783-PLAN. Happy to talk to you.
Okay. All right. That was fun, John.
Thank
As
you.
always, thanks, everybody, for tuning in. We'll see you next time on 5 Minute Financial.